Hey everyone, and welcome back to the FishMarketAcademy, where we teach you how to fish for gains. So in today's video, we'll be exploring THORChain, where you can do cross-chain native swaps. So if you found this video useful, do remember to like and subscribe, and let's get started. So as always, nothing I say is financial advice. So what is THORChain? THORChain is basically built on the Cosmos SDK, and they were launched in 2018. And what's cool about them is they allow you to swap natively across chains. So if you have Ethereum on the Ethereum network, and then you want to swap for Bitcoin on the Bitcoin network, right now if you're on Ethereum only, you would swap with REP-BTC, which is not the real native BTC, and REP-BTC is custodied by a centralized authority, which goes against the ethos of decentralization. So THORChain now allows you to swap ETH into Bitcoin natively on the Bitcoin network without relying on proxies. Additionally, every asset is paired with the RUNE token to create deep liquidity within THORChain. So you won't get situations where you have fragmented liquidity, like having different types of USDT paired with different tokens. So if everything is paired with RUNE, then all you just need is to have liquidity for one of the side, and then the other side of RUNE will always have deep liquidity. So that's what makes this thing pretty unique and allows for native cross-chain swaps without too much slippage. So when you swap assets with THORChain, you'll be basically swapping with RUNE first, and then after that, you'll swap the RUNE to the asset that you want to, and this all happens behind the scene. So if everything is paired to RUNE, this allows for deep liquidity without too much slippage. Next, we go to THORNodes, which are basically their validators of the ecosystem, and this is pretty important because they operate the liquidity pool of different assets, for example, BTC RUNE, ETH RUNE, etc. And they also govern the multi-sig wallet that handles the transfers of native assets in and out of these different liquidity pools. So it's very important that they are acting in the best interest of RUNE, and there are incentives to align these interests so that they do not act maliciously against the network. One example of this is that node operators are required to bond twice the value of assets of the vault in RUNE. So basically, if they are managing like BTC RUNE, they need to bond twice the value of the BTC RUNE in total as a security measure, so that they won't basically do bad things to the pool. And that's a prerequisite before they can actually run a Thor node, which is basically a Thor validator node. So speaking of vaults, essentially there are two vaults in THORChain, known as the Asgard Vault and the Yggdrasil Vault. So you can see that there's a lot of Norse mythology that they have added in, which makes it pretty cool in terms of their theme. So Asgard is the primary vault that holds majority of the assets, including the bonded RUNE from the nodes, and is responsible for the adding and removing of liquidity within the pair. So like we mentioned about the BTC RUNE, ETH RUNE, and these are all inside the Asgard vaults. And as we just mentioned, operator nodes need to bond twice the number of RUNE in terms of value of the whole vault. It's also kept inside the Asgard Vault as insurance to ensure that the node behave in the best interest of the network, because theoretically speaking, they can actually run away with the vault assets in some way, but then they will be giving up their insurance because the insurance is held separately, that is inaccessible to them. So it makes no sense, which I'll go through in a bit later on why that's the case. And the smaller Yggdrasil Vault is run by each node, which helps to perform the swaps. So these are usually lighter transactions, and therefore the whole vault can be a bit smaller. So this is meant to be the more active vault, and then the Asgard Vault is meant to be the more slower moving passive vault that only handles adding and removing of liquidities most of the time, although it does do some swaps when the Yggdrasil Vault doesn't have enough liquidity for that. So here we can see the Asgard and the Yggdrasil Vault, and you can see that each vault, right, they contain multiple liquidity pools. So the vaults are there to decentralize the liquidity pool or the asset, so that not all asset is within just one vault. You can see that there are multiple vaults being created. And THORSwap, of course, has their own dashboard where you can see additional information, but I'll put a few different useful links down in the description below, where you can see more in-depth analytics about the THORChain ecosystem. Now let's move on to something that I find really interesting about the THORChain ecosystem, and this is known as the incentive pendulum. So this sounds pretty complex, but I already mentioned about this in a bit just now. So let's go into a bit more detail. Because every pair is paired with RUNE, this means that if users deposit one asset into it, half of it will be swapped to buy RUNE. So that increases buying pressure. And as more liquidity comes in, right, non-RUNE liquidities like Bitcoin, Ethereum, and soon we'll have Luna, this will boost the price of RUNE due to its deterministic pricing model, which is something I'll explain in the next slide. And this will also add more liquidity and depth to the pool. So Additionally, if a node acts in bad faith and steals from the vault, like we mentioned just now, mathematically speaking, they will lose 1.5 times the value of what they stole in RUNE, because that's the amount of insurance that they need to put up, and this does not make economic sense for them, so that's why they don't steal the vault. So how does this deterministic pricing model works? And there's a simple formula where you just take 3 times the sum of non-RUNE assets locked. Assets locked is also commonly known as TVL, right? So take the non-RUNE TVL and you divide by the RUNE circulating supply, and that gives you the approximate value of RUNE in terms of like the floor price. So this is known as the deterministic price. Of course, RUNE can be far above the deterministic price if there is speculation and people who are front running this. So if you see over here, you can see that this is the optimal state where you have the capital bonded is 67% of RUNE, right? And then the 33% of RUNE is here and is paired with half in the non-RUNE asset. So the incentive pendulum will try to strive towards this optimal state, and therefore if you see, right, node operators on this side need to bond double the amount of RUNE in the pair in order to actually provide insurance to it and earn the optimal amount of RUNE rewards. So if node operators do not pair the amount of RUNE required, then they will be earning less emissions. So now let's talk about impermanent loss, right? Because if you put your assets in, half of it will be in RUNE, and you know crypto is very volatile and RUNE price is also very volatile and it will just keep moving up and down. How can you ensure that you don't suffer from impermanent loss? Because that's not something that you want to deal with. And they actually have this impermanent loss protection, also known as ILP, whereby if you are subjected to impermanent loss when you actually remove your assets, right, they will actually calculate whether you have made more by providing a liquidity provider. And if you actually lose money by providing liquidity, you will actually be paid the difference so that you don't actually suffer from impermanent loss. But do note that this is not immediate. So there is a 100-day increase where every day increases by 1% of your protection. So after you put for 100 days, then you will have no impermanent loss because you have full impermanent loss protection. Just to clarify about impermanent loss protection, is basically if, let's say you put BTC and RUNE, but you only put BTC inside because you don't have RUNE readily available. So you just put the BTC inside, and on the back end they will sell half of your Bitcoin into RUNE. So now you're exposed to RUNE, and when after 100 days, let's say RUNE drops a lot, like it drops by half, right? Due to impermanent loss, you will receive a lot less Bitcoin and a lot more RUNE, right? That's how it works for impermanent loss. And let's say you don't want that, you want the same amount of Bitcoin that you put in as when you exit. So after 100 days, if you put in 10 Bitcoin inside, at the end of 10 days, if you withdraw, no matter how much RUNE drop compared to Bitcoin, you will still receive your 10 BTC back. But of course, if RUNE goes up, then you will have more Bitcoin. So there's no impermanent loss there. And therefore, when you withdraw, you won't have impermanent loss protection because there is no loss for you to be protected from. So hope that is clear. So let's take a look at the upcoming updates. So this video is actually a bit late. I already have these slides done up last month. So Synths is actually already now released, but I think it's still very relevant to talk about. And Synths are basically THORChain's way of holding underlying assets and creating synthetics in exchange, which allows for better slippage and a better user experience. So Synths are backed by a 50% RUNE and a 50% underlying asset, so it's the same 50-50 base pair, and it's being collateralized to create the Synths. And the collateralization ratio is 100%, so you get maximum capital efficiency. Right? Users cannot borrow anything and cannot get liquidated. So why did they create this? Because basically when you are trading Bitcoin, which is one of the main assets in RUNE and in the whole crypto space, right, it's one of the main reasons why RUNE was created, so that you can swap native Bitcoin around. Bitcoin has a block time of about 10 minutes, so every single transaction done on RUNE with Bitcoin takes about 10 minutes to confirm, which is very unpractical. And Synths are a way for Bitcoin to be tradable more frequently and more easily without so much fees by creating Synths Bitcoin by collateralizing RUNE BTC to create that. So instead of trading actual Bitcoin, now you can trade Synths Bitcoin, which is still backed by native Bitcoin, and it's all done through the THORChain ecosystem, and they are all backed by real native assets, so it doesn't break that ethos of decentralization or trying to have proxies or reps. So Synths are not really like rep assets. They are just a representation of the real assets in a decentralized way. And this is a pretty useful utility. So since THORChain is built on the Cosmos ecosystem, Synths can also be used for interaction with any Cosmos chains that have implemented IBC. Although THORChain themselves have not yet integrated with IBC, I do hear a lot of rumors that they are planning to integrate with IBC soon. So hopefully when that comes, you can get all kinds of Synths assets on IBC backed by native assets held in THORChain on the Cosmos ecosystem. Alright, so now let's talk about token utility. So RUNE is a native token of THORChain, and it can be used for, of course, governance, where you can vote on proposals and all that. And it's also used for swap fees, but take note, this is only for swap fees for inbound RUNE transactions on THORChain. So what this means is that if you are holding RUNE and you want to swap your RUNE out into Bitcoin or any other asset, you are actually sending RUNE into THORChain. So that's why it's called inbound RUNE transaction. And in this case, you have to pay your fees in RUNE. And when you are getting out in Bitcoin, you don't actually lose any Bitcoin in fees or anything like that. So if you are doing non-inbound RUNE transactions, like you are swapping from Luna to Bitcoin, then guess what? You don't actually have to pay any swap fees in RUNE, but you will of course be paying your fees, and it's always going to be in the asset that you are sending in to the THORChain. So Luna Bitcoin, you'll be paying Luna. And then if you're swapping Bitcoin into Luna, you'll be paying Bitcoin. So that's how it works. So one of the beauty of THORChain is that you don't even need to have RUNE to be doing all these cross-chain native swaps. For example, Ethereum to Bitcoin, you don't even need to pay in RUNE. You don't have to have RUNE to use it. But the fees that they do use is about 3 times your average fee. So if you're doing an Ethereum transaction and if Ethereum is spiking, you do have to pay 3 times that gas fee, which can be pretty expensive for Ethereum if the network is congested. So that is something to take note of. But if you're doing like Luna to Bitcoin, I just don't see that being very expensive to the point where you don't want to pay for it. Then of course they are a liquidity based pair, so every asset is paired with RUNE, so that's one of the key benefit of RUNE token. And of course the rewards are also paid in RUNE. If you are a liquidity provider, then you earn rewards in RUNE, and if you are a THORNode validator, you also receive RUNE rewards for validating the network. And of course it's used for security purposes. Like I mentioned earlier, THORNodes are required to bond RUNE to validate the network. Okay, so RUNE Rewards. When liquidity providers deposit their assets in liquidity pools, they earn not just the yield from the swap fee, they also earn RUNE emissions. And the rewards are given in RUNE and the native asset from the pool. So later on, I will do a quick demonstration of how to put your asset in and what are the different APRs for the different pools. So currently THORChain is in ChaosNet, which means that there's a cap across all liquidity pools. So you can't add more liquidity if the cap has been reached until there's a proposal to raise the caps further. So this is put in place because ChaosNet is a place where everything is still new, is still testing, and they want to test with real economic incentives and consequences. So that's why they have it in like a sort of mainnet, but they also want to protect the network and its users. So that's why they put a limit. So there has been hacks in the past, and thanks to ChaosNet, the users that got hacked, they have been made whole because the amount that was hacked was still controllable or was still manageable by the THORChain team, and everyone that lost money in the hack eventually made back the money from the THORChain insurance. And ever since then, they have implemented a lot of security features and updates to ensure that all these kind of exploits is very unlikely to happen again in the future, especially as they push out to mainnet where they will remove these caps. So I think this is going to come very soon, and if they are confident enough to remove the cap, then I would say the system is definitely a lot more secure compared to the past, and I'm going to put in some funds as well just to experience the whole ecosystem myself. So let's take a look at some of the various farms on the THORChain ecosystem. And these are the farms on THORSwap, which is the front-end user interface of THORChain. So you can see that Bitcoin gives you 23% APY, which is pretty phenomenal. And ETH is giving you 28%, which is pretty phenomenal. Because if you compare with like staking rewards for ETH, it's about maybe 10% or less. And on Bitcoin, 23% is just unheard of, right? So Bitcoin, BUSD, Binance Chain Token, right, the stablecoin is giving 83% APR or APY, which is super insane. And all these are only possible because you are swapping with RUNE on the other half of it. So it's actually like Bitcoin RUNE, ETH RUNE, BUSD RUNE. So there is impermanent loss, but like I mentioned, after 100 days, any type of impermanent loss, if RUNE were to drop a lot, it's going to be mitigated. So if you put in 100,000 BUSD, after 100 days, even if RUNE drops, you're still going to get back 100,000 BUSD. So just to elaborate a little bit on how that works for impermanent loss protection, every time there's a swap, the gas fee you need to pay is 3 times the normal gas fee, and a part of that goes into the insurance. So that's why when the price of RUNE does drop and you get impermanent loss, because a portion of the swap fee goes into the insurance, this insurance is used to pay back for your impermanent loss. So I'm not sure if there's a cap for the amount of insurance in a pool, but under most normal circumstances, it should be sufficient to pay you back. So I would say these farms are pretty juicy and the liquidity in them are pretty decent. So I think this is a pretty good place to park some of your Bitcoin or ETH as well, if you want to just hold them and get a bit more yield on top of them. So let's explore the tokenomics. There's a total supply of 500 million RUNE, and right now there's a circulating supply of 230 million. But actually this number is a bit outdated. I think the number is closer to about 400 million right now. And this means that there is less inflation. And the remaining inflation for RUNE will be distributed over a period of another 8 years. So I would say the inflation for RUNE is now not that big of a problem compared to last time. And I think if the narrative were to do well, I think RUNE can keep going and surpass new all-time high easily. So I've actually come up with some scenarios and let's explore them. So there is an upcoming integration with Terra and IBC, and that will allow for native swaps with UST and Luna from the Terra ecosystem. And this is very bullish for the price, because if more non-RUNE assets come into the ecosystem and gets integrated, then the TVL goes up, and due to deterministic pricing, the floor price of RUNE goes up as well. And if THORChain manages to capture just 0.1% of Bitcoin supply, right, and as well as 1% of UST's total market cap at the moment, this would increase RUNE's TVL by 5 times to 2.52 billion, valuing RUNE at the current price and current circulating supply around $30. So the price of RUNE right now is about $8. Of course, if you are seeing this video, it might be way higher than that in the future. But that does show that there's quite a lot of room to grow if these fairly realistic scenarios were to happen. So that's quite a bullish case. Additionally, THORUSD is also some new updates that they are creating where they will burn RUNE in order to mint THORUSD, and this is very similar to the Luna UST model. And this is going to be the start of THORFi or THOR Finance, where it's a lending protocol that will allow you to basically collateralize your assets in THORChain to borrow against them, such as borrowing THORUSD and then swapping out with other stable native assets like a BUSD or UST. And then you can basically use your THORChain assets to generate more yield by going on a bit of margin or leverage. And this does generate more TVL for the network, increasing the deterministic pricing for RUNE, and it makes RUNE more bullish. So in conclusion, I think THORChain is a pretty interesting and novel protocol with no other competitors currently, and it allows for users to swap between native assets without using a centralized exchange, right? So I find it very ironic that everybody uses like centralized stablecoins or centralized exchange when swapping with Bitcoin. And recently, we have seen how the Russia-Ukraine war has created a lot of intrinsic value, or shows that there is intrinsic value for having truly decentralized exchange that cannot be censored across the world, that cannot be censored by governments. And THORChain could be the decentralized exchange that many people use in the future when they're doing cross-chain native swaps that doesn't have to rely anywhere in the whole transaction on a centralized party. But there are upcoming competitors like Chainflip and Stargate, and we shall see how they perform against THORChain. So some short-term drivers that might increase the TVL of THORChain would be the release of Synths, which allows for much better trading experience for Bitcoin, as well as integration with other chains like Terra Luna ecosystem and their integration with IBC very soon, as well as the upcoming mainnet launch. So although THORChain has a pretty bad reputation of being exploited 3 times, anyone that got exploited were made whole by the THORChain team, and their code is pretty complicated. So it's a good thing that they have this chaos net, which is like an experimental mainnet, and this allowed for these exploits to take place in a more manageable scenario. And I think they have upgraded their security by a lot since the exploit, so I think they are a lot more secure now. So I think we'll only see more and more applications integrating and interacting with THORChain, and this will create more TVL and more transactions and swaps for the THORChain ecosystem, which would increase its fundamental value as well as price. But at the end of the day, do your own research and invest with caution. So I hope you guys found this video useful, and do remember to like and subscribe if you did, and I'll see you guys again soon. Bye!